Okay, folks, welcome to the weekend commentary. I hope everybody had a great weekend. Looking forward to another trading week. We have some serious headlines out of Omaha that we'll be talking about. We'll go over some charts of the travel and leisure sector along with the airliners. We'll see whether or not we had a signal last week that something like this might be coming out. And Trader Isaac, thank you very much. Please smash that like button. Please, thank you very much. Franklin, good evening. William, things are going well here in Suffolk. Beautiful day today in New York. Really nice. Got some yard work done. I feel good about it too. Hopefully I don't get poison ivy. Like once a year I get poison ivy, guaranteed. Amerigamigo, hello sir. Danny, welcome aboard. All right, so let's take a quick poke through. RL, let's take a quick poke through the futures action to see how we're opening up. And obviously, looking at the E-minis right now, we have gapped down 1.26% at current. We'll let these settle down a little bit. Let's take a look at currencies. And we'll come back in a short moment. The dollar, big reversal today. Big reversal here. I mean, Friday was a horrible day for the dollar. After the close, anyway. Wow. Let's drill down here, take a look at a 15-minute chart, and you can see what I'm talking about. The dollar just nosedived. And now we are popping up a bit here, just shy of resistance. My guess is that the headlines will be that there is a dollar shortage, and that is fueling the rally. So let's watch and see whether or not we get the dollar that breaks out above this resistance level and closes there. That's the most important thing, closes there. And when I take a look at price action like this, I have to look at gold because gold was a little bit wobbly last week. Along with the miners. I thought I had this ready. I did not. My apologies. Gold is up over half percentage point. So you have the dollar and gold rallying in tandem. That tells me that there is fear in the market. Let's see if I'm accurate. Let's take a look at the VIX. If the S&P is gapping down, this is pretty much of a no-brainer. The VIX should be moving up higher. If I could find it here. There we go. Yeah, we're up over 3%, nearly 3 1/3% on the VIX. The Nasdaq. This is the Nasdaq 100 gapping down. We're short. Good for us at current. At current, it's not as bad as the S&P 500. No shock there. I mean, the divergence between the mega cap names and the overall S&P 500. When I say mega cap, I'm talking about 5 names out of the S&P 500, not just the top 100. And they are dominant. But we're beginning to see some chinks in the armor here of these names. I'm going to go to a chart of the S&P 500 in a moment, a few charts of the S&P 500. Nat Gas. Nat Gas had a very volatile week last week, but we're popping up here at current. Up over 4% on the session. Oil down over 4%. Now, here's a problem that I see, possibly, it's not in the books yet, is that oil had a nice rally. Yeah, I even pointed this out. Somebody said they wanted to short oil. When I said, I think they're going to set this up for a double bottom setup and rally it, and they did. Somebody wanted to short oil, and I said, don't do it. This was on Swing Trading today. I said, don't do it. And sure enough, they ripped oil higher. I wasn't a part of it. But what they did is they broke it out above resistance. And now, after a retest, Now at current, we're flirting with a breakdown. So this would be pretty bearish if we fail to hold this support level in red. And at current, it's not looking pretty good. It's not looking pretty good. I don't think that makes sense. The joys of being live. So the price of oil is suspect at current. And again, we're only 6 minutes into the new week, right? So anything can happen here. We'll come back and we will take a look to see how we are settling in. Let's go to some headlines that are rocking the markets at current. Case in point, off of Zero Hedge. You know, it's all over the place. This is the headline on Zero Hedge. Brace for a Monday massacre. Buffett liquidates all airline holdings as Berkshire sees another leg down. You know, so this last round of selling back in March, you heard a violent sound of silence, meaning there was no Warren Buffett out there to trumpet the well tidings or the good tidings of the United States and how we're going to bounce back and how he's buying. And apparently at these levels, he's certainly not seeing value. The airlines are just kryptonite to him. They have in the past. U.S. Air was a holding that he had many, many years ago. He said he would never go near the airlines again, and he did, and he got slapped on the hand by $50 billion. Now, what Buffett likes are companies that buy back their own shares, but usually only those companies with strong fundamentals that are deserving of buying back their own shares because there's value there, not because it's linked to the compensation of the CEO and the board and the executives, where they reduce the number of shares outstanding and then they tweak the EPS to make their results look all that much better. They get paid bonuses while we bail them out when the economy goes to hell in a handbasket. That's what happens over and over again. And he sings the praises of Jay Powell on one hand, and on the other hand, he said, listen, they acted too quick. You needed to see a washout. You needed to see bankruptcies. And I'm reading into what he said, but I know what he meant. He wanted to see blood in the streets. A guy like Warren Buffett, who's sitting on a pile of cash, more than what Apple is sitting on, is not going to put that money to work, while the only thing that's keeping the markets up is the Federal Reserve. There's no value there. There is no blood in the streets. So I get where he's coming from with regards to the airlines, but I don't think that he's isolated solely to the airlines. I think he's pissed. He's nearing 90 years old in 4 months. Here's a guy that's a warrior. He wants one more round. He wants another bite at the apple before, God forbid, this is quite possibly his last, how do you say, crash, his last, and God forbid, hopefully I'm wrong, his last opportunity, grand opportunity to buy back in, to be that oracle that he has in the past. So I get his frustration. I get why he's doing what he's doing. And he sees lower lows. And we've been saying that. Now, the market breadth, Facebook, Amazon, Apple, Microsoft, Google, are all up 10% in 2020. Up 10%. They were up higher. Granted, they didn't make their all-time highs with the exception of Amazon. But here we are. They're up 10% on the year. The remaining 495 S&P 500 stocks are down 13%. That's it. That's not too bad. We have 30 million people out of work and rising. Yet the S&P 500, by and large, as a sector, is down 13%. It doesn't make sense. And here's, I'm big on correlations. I'm big on having validation of whether or not we've seen a bottom, a top. And one of the headline here is If a bear market is over, why are commodities and the transports underperforming? That's a valid question. And when you take a look at the CRB index, that's commodities, that's your copper, steel, aluminum. You want to see your industrial metals begin to rally, because while they don't trade in tandem all the time, the S&P 500 and the CRB index, they usually bottom out at around the same time, because usually it's your commodities that begin to rally first. That's the first leg of your bull market. They'll fall off first, and the S&P 500 can continue higher as you have new sector rotation coming in, new industries that are up and coming. All of a sudden, you don't hear about Google anymore, Apple anymore. Now you have different companies that are out there, and they're the new leadership. They'll be the new top 5 acronyms at some point in time in the future. But at current, what you're seeing here in red is the S&P 500, and in blue, the CRB index, the commodities index, which is dropping. There is no bottom yet. The S&P 500 is continuing higher as if we've bottomed out and the bottom's in and it was all is right with the world. It's insanity. It's absolute insanity. So we'll take a look at some charts here in a moment. Let's talk valuations first. Where are we at? We have a good, strong feel for how earnings are this quarter. The banks, horrible, getting worse. Large cap tech, surprisingly not as bad, but forward-looking guidance, really, they don't know. And what the market doesn't know, they usually sell, right? You're going to get some selling out of indecision, and these companies are priced handsomely. So I'm confident that we're in the right direction at current, being short the market, and I'm cautiously short. We're looking for milestones to get hit before we go leaning further into the short side, simply because I see the futures that are down at current does not make me sleep better at night. I'm frankly afraid of being short this market, because you have such an activist Federal Reserve out there that will do anything. Think about what they did, and I'm blaming them, but I don't believe that there are, what's the word? I forget the word. It's only when I'm live that I lose my train of thought. Coincidences. So the other day, we're waiting for, with bated breath, we're waiting for the GDP number to come out. And we knew it was going to be bad. But all of a sudden, it was delayed. It didn't come out at 8:30, like it's supposed to, Eastern Standard Time. And I just started doing this with my head, because something's a mess. Sure enough, what did they do? They front ran the Gilead news about the trials looking good, blah, blah, blah. And the headlines, the algos just took those headlines and ran with them. And then they released the GDP numbers after the Gilead numbers late. And they were worse than expected. But the algos took the bullish news and took the market higher. We've since given up a vast amount of those gains. But this is the environment that we're in. It's not easy being short this market. So that's my tale of woe. So the CRB index failing to confirm with the S&P 500, what CNBC is trying to sell you. I don't believe that this bottom is in. Am I somewhat concerned about the strength of the Nasdaq 100 and how they closed out the month last month? You bet your bottom dollar I am. They closed out that last month very, very strong. Very close to the highs of the month. A little bit of selling in the final day. That was it. Very powerful move. So we're not resting on the headlines that are at current working for us. Believe me, the powers that be will generate new headlines to make me very, very sorry that I decided to take up a short position. All right? They will do their best to make that happen. Guaranteed. So let's talk valuations. So I kind of got lost in the tracks I kind of got lost in the woods there with my comments. This is where I wanted to go. So in red, we have S&P 500 overvalued. That's a PE above 20. In blue, fair value. In green, undervalued. We remain at current overvalued. That's using GAAP earnings. And when you take a look at the Shiller PE ratio, I mean, we are very, very expensive. 26.50. We're not where we have been in the past, prior peaks, but we're still very, very expensive here on the Shiller PE ratio. Very expensive. So let's take a look at first the shares of Berkshire Hathaway, because I was looking at them, oddly enough, because I knew the meeting was this weekend. And take a look at how these shares performed going into, and I didn't even look at this on Friday. I looked at them on Thursday, and they were up. We flashed a bearish key reversal on the week. So no great shock here that we're probably going to see lower lows. Look at this volume. Lots of distribution of Berkshire. Rolling over on Stokes. And folks, this is what I always warn about. If people are wondering what I'm talking about, I'm expecting a rollover on Stokes. This is exactly what I mean. We're not moving up to new higher highs on Stokes. What we're doing is we're rolling over. We're putting in lower highs. And that's on a weekly chart. That's very bearish stuff. So what we want to do now, being short, now we want to identify where we exit our trade if it goes against us, right? This is what we need to know. So hypothetically, were we short of Berkshire, which we're not, we need to get out on a rally and a close above the $285,000 mark on Berkshire, or even closer at the $280,000 mark. And that would take us out. But it looks at current that Berkshire is going to go lower. I'm going to assume that the B shares look the same, and they do. Just a lower price. Same chart, lower price. Now, taking a look at the Dow Travel and Leisure Index, if we're going to see a new leg lower in this market to new lower lows, you would expect to see them first in travel and leisure. But we're not there yet. This is a monthly chart. Sorry. We're nowhere there yet. We had a nice rally off the lows here. I'll address some questions in a moment. I just want to annotate this. We'll do a little bit of analysis on the travel and leisure sector, and then we'll take a look at the airlines. So last week, we actually closed up on travel and leisure. Now, when do you know we're in trouble here? And we're probably going to probe to new lower lows. If we break down below, let's call it, what's the low here? Let's call it 287. We closed down below that level. Travel and leisure is on its way down to new lower lows. I predict that in all probability, we're going to take out the lows. It may not be this month. Could be next month. Taking a look at the airlines. Where's my airline index? There we go. Okay. The XAL, wow. All right, let's go to a weekly chart. I don't have it saved here. Okay, interesting. All right, so very similar to what we saw on the travel and leisure sector. What we have here is a triangle formation. What we're looking for, probably tomorrow morning, is a break of support. And that support level, if we close down below 41.92 on the XAL, we'll probably take out the lower band of this triangle formation at $40 per share in a heartbeat. So it looks as though travel and leisure, airlines, it all makes sense that they're going to be the first ones to make another run at the March lows. I want to take a couple of minutes to go over some symbols that were sent to me that I believe Buffett has in his portfolio. CACC, Credit Acceptance Corp. Let's clean this up. Not a bad looking chart. Last week, anyway. We attempted to break out, but we were rejected. Double bottom set up an RSI, Stokes. I wouldn't buy it. I'd buy it on a breakout. I don't know what they finance. If it's auto loans, I don't know if I would want to be a part of it. Now, on a daily chart, not a bad day on Friday, actually last week as a whole, because we broke out on the 29th, held on the 30th, retested on the 1st. So the question is, do we hold the support level or do we fail? If we drop back down into this trading range, you have to avoid, because that would be a bull trap. A failure to hold support or a breakout is a bull trap. Call it a breakout point failure. Call it cupcakes. It doesn't matter. All I know is that it's very, very bearish at a bare minimum. You're going to come back down here to the lower band of support, and it's highly probable in this market environment that we break that support level. So daily chart looks good. Weekly chart looks suspect. CVNA. And then I'll take some questions and speak to some comments. Oof. Avoid this. Bearish engulfing. One of the most bearish candlesticks you can get. You really want to avoid these shares. And if we break down below 74.50, thereabouts, we're coming down here to around $58 per share. So I would avoid these shares, and they could quite possibly become a short. Daily chart, we held support on Friday, bounced a little bit, rising 20-period moving average, acting as a floor in the ceilings, acting as a rising floor on the shares. But I wouldn't buy these shares. The weekly chart takes precedence over the daily chart. A lot of damage has been done here. Let's go over some comments. All right. A lot of people. Oil is up 10%. Not the last time I looked, Thomas. Yang has jumped almost 20% in the last 2 trading days. Time to enter. It could be, and for disclosure purposes, we're long of Yang. We are short of China. We've been talking about that. The saber rattling continues, and I'll bring up a chart of Yang. We'll see how it prices tomorrow morning. Because usually you either gap up or gap down on Yang. But it traded on Friday independently of the Chinese markets. Where the heck is it? Here, just bring it up. All right, so last week what we had was a very bullish week. We had a outside reversal week and a bullish key reversal, one of my favorite patterns. Did we break out on a weekly basis? No, we did not. But it's a very bullish chart. It's keeping us long at current. Volume rose. Take note of your ultimate oscillator. Higher lows, looking good. RSI hooking up. Stokes still probing the bottom. I'd like to see them hooking up. Daily chart. RSI hooking up, Stokes hooking up, good stuff. We closed above the 20-period moving average. Volume rose sequentially. So the way to play it, I think, is that I don't know whether or not I would. These shares are so volatile. Would I go chasing them? No. I'd want to see a pullback and a retest of the breakout point. This has gotten kind of old. Let's remove this. So here is where we broke out. Now, we may not get this pullback, but where would be an interesting pullback too. I mean, when I say we may not get this pullback down to this lower band of support, but where we may pull back to is around the $40 per share mark. And while that may seem a lot to ask, it's easily achievable. I mean, these shares are extremely volatile. So I would not go chasing. We have resistance above. If we gap up, I might even look to book profits into resistance at around $47 per share, $47.50. We have a nice breakout here on RSI. You could watch for a pullback and a retest on RSI. If that coincides with a pullback to $40 per share, there's your entry point with a stop loss right below it. So that would be my play here. So we have a profit here. Longer term, I think that China's going to take it on the chin. Does that mean that China's going to crash tomorrow, the Shanghai Composite and the Hong Kong stock market index? No, I don't think so. I think the saber rattling is certainly not going to help their stock market. And if we slap tariffs on them again or sanctions, forget about it. I mean, the stock market here is going to be extremely volatile on that news. Forget about the Shanghai Composite. Nicholas, hi Bob, how are you? How's it going for you? Doing well, Nicholas, thank you. Lots of tension. Yeah, how are things over in France, Nicholas? Hope everything is well there. What is affecting the market? This is from Andy. All the news seems to be good at the moment. I'm not sure. I mean, you have earnings that have come out, and I'm assuming that you're referencing earnings. You know, they're painting a picture of an earnings season where, you know, you had a full quarter of companies that provided you a full quarter's worth of CCP virus impact, right? They didn't. They had about 2.5 weeks on average of the CCP, Communist Chinese Party virus impact on their earnings. A lot of them are not giving clear guidance for next quarter. Many have withdrawn guidance. So the earnings season is a bit skewed. It's not as optimistic as one might think. And everybody's saying, cheering the praises, even Warren Buffett, cheering the praises of Jay Powell. I don't see how 30 million unemployed and rising is necessarily a win. They got us into this mess to begin with. Everybody wants to blame the virus for the damage that's being done right now. No. It's the debt. It's the debt that the Federal Reserve allowed to pile up and then set the stage for a pin to prick that bubble, which is the CCP virus. So I don't think that the news that we're getting can come close to overshadowing the damage that's been done to this economy. And we're nowhere near being healed. And the debt continues to rise. Elon Musk is frustrated too. Yeah, he's losing it. Eric, I think I addressed the Yang question. A lot of China questions tonight. Hey, Bob, also curious about the play with Yang in terms of adding to the position. I would add where I mentioned I would, if I saw a pullback to $40 per share and we closed there, RSI held the retest of the breakout point, then I would look to add. John Yakes, excellent analysis. Thoughts on small caps? I think that, okay, so the small caps, I mentioned, we got long of them going into last week. We were long of the leveraged ETF, putting you long of the small caps, the TNA. We booked a profit of 11%. We did not get out at the top. It's not our goal to get out at the top. Our goal is to book a profit. I was negative on the market. We saw an opportunity because I predicted that they were going to see money rotate into the small caps and into the banks just to try to take advantage of the headline news being already in the rearview mirror on the banks and all the shorts that were in the small caps. And what the market was looking at in earnest was earnings coming out of the 5 mega cap names, Microsoft, Facebook, Amazon, you know the names. They were focusing on those, but they had already run. And the bet on our end was that we were going to get a sell the news event on the mega cap names. Prior to that, a rally in the banks and in the small caps. Am I still bullish on the banks and small caps? No, I think they've had their day. Now we need to see whether or not Buffett's right. You know, does this market sell off? Or do we get new Fed shenanigans to keep the market propped up? That's what keeps me up at night. So we could bring up the IWM and talk about that for a moment. How it looks. Let's go to a monthly chart first, and we'll do a top-down view. All right, first thing that jumps out at me here is that you have your 20-period moving average, which is rapidly approaching the 200-period moving average. So your moving averages aren't going in the right direction. That's concern number one. Concern number two, obviously, the lower highs, right? Do I think that a short squeeze to new higher highs month over month is possible? Sure. But I think it's fleeting. I think that the small caps, along with commodities, will be the first to emerge out of whatever the washout's going to be here. Whenever they're going to allow that to happen, it's going to happen. It's just a matter of when. Now, taking a look at a weekly chart, you know, this is not what bottoms are made of. We were oversold. We rallied. We saw major, major selling into the back half of the week last week. That sets the stage for a break of support. Daily chart. Now, on a daily basis, we're holding support. But we have our Stokes going in the wrong direction. This is a momentum oscillator. They haven't broken down yet, but you're beginning to break down to new. When I say they haven't broken down yet, you don't have the slow line in red making new lower lows. You do have the fast line in blue or purple, whatever color that is. Whatever. Blue. Breaking down to new lower lows. So the Stokes are going in the wrong direction. Do I think that the small caps will probably break here? The futures are implying that. But going by the daily chart, we closed at support. If we close down below the lows of Friday, well, then we're being told the direction that we're going to be going. We're breaking down and we're going to see lower lows. I would not buy the small caps. And in fact, I would be looking for a short entry point on the small caps. Oliver, yeah, please show your support. Smash the like button. Futures gap down. Oliver, I wish I could talk about Uber. I have a conflict of interest with the ride shares, and I can't go there, so please forgive me, but ethics take priority. So my apologies about that. Glad you had a good day, Bob. Would you say DBA is a good, safe, long-term hold? Loving the DBA. I spoke about this on Thursday night. I haven't gone back to check out the week to see how we closed out. We'll check that out now. So I'm glad you brought that up. Okay. You have, Thomas, you have a target of 115 of IWM, and then you're looking to get 100% long, or you are 100% long? I think you mean you're going to get 100% long, if that's accurate. I don't want to put words in your mouth, though. Oil tanker stocks, I think they had a decent pop. I would look at NAV. I'll take a look at that chart. If I was going to buy one, it's going to be NAV. So your 115 mark, let's call it right there. You'll probably see. I don't disagree that you'll see a pop at that level. There's a lot of volume at that level. I would expect a defense, and you have history of acting as support and resistance. So that's not a bad support level to trade off of. Whether or not that's going to be the ultimate bottom, you know what? You could be right for all I know. I don't have a crystal ball. I tend to doubt it, given the debt, given the uncertainties. So, but you could be right for all I know. I don't know. Gold. How about silver, or stick with gold and the miners? I'm worried about paper gold. I think the COMEX has some issues, and they're probably going to be investigated. And I don't know this for a fact. This is my own opinion, okay? What happened with UNG should have been a wake-up call to regulators. It blew up. And none of those most of those traders that were long of those oil futures even know how to take delivery of oil. So what if on the COMEX you had everybody that owned, because remember there's a physical shortage of gold. What if everybody said, you know what? I'm going to exercise my contract. I'm not going to sell it. I'm going to exercise it. I want my gold. Deliver it to me. How are they going to do it? Do they have that gold? Could there be a run on the COMEX? That's my concern about owning gold. If you paper gold. Now, if you're going to buy the physical, go for it. If you can get it, go for it. Silver, same deal. The miners, love the miners. We're long of the miners. Nat gas, up nice. Yeah, I'm going to go back and check that on. Hey, Pat, I'm going to check that out. AA, American Airlines. Oh, that's Alcoa. Duh. I have airlines on the brain right now. Alcoa. I don't have a lot of hope right now because, like the CRB index indicated, we haven't seen a low yet. And Alcoa is clearly in a downtrend. We haven't made a new monthly high yet. So at current, you have to avoid these shares. What I think you're looking at here on Alcoa is a dead cat bounce. They broke down the week of the 9th of March, and not a ton of damage done as a result of recent events, to be honest. But last week, while they were up, they closed well off the highs of the week. You saw selling pressure at resistance. I couldn't buy these shares. So while I'm not saying I would short them, I wouldn't short them. If they broke the support level down here, and this line really doesn't do this pattern justice, a little bit too loose. If we broke down below support, then I would consider shorting the shares. Daily chart. But it looks at current, given the price action, I think that we're probably setting up here for lower lows. And here's support. We break down below 741 per share. You're going to have the shorts leaning into this name, so I would avoid it. Pat, our SQQQ should do well this week. Yeah, and I'm thinking about if they gap it down, if they gap the market down tomorrow, Pat, what's in the back of my mind is the monthly price action of the Trip Qs. It's kind of haunting me. And I simply just don't think that they're going to let this market just drop to new monthly lows. Here's the monthly close for April. I'm short of this monthly close. While, yeah, it's great this month, this is a bullish setup. This is very, very bullish. And I'm nervous that they may try to rally it back. What's keeping me short? I shared earlier with you the fact that we had 5 names that are up 10% on the year, with the remaining 495 S&P stocks down 13%. And I say only 13%. I shared with you also that stocks are expensive relative to the Shiller PE ratio, relative to GAAP PE. I won't even bother bringing up that chart. Stocks are still expensive. Now, here is what keeps me short. Here's why I think that there is more room to go to the downside longer term for the Microsofts of the world. Yearly RSI, 91.95. This is the value of looking at charts from a very high level view, a macro view, not daily 15-minute charts, and trying to determine what the next year is going to bring by a daily chart or a 15-minute chart. That's insanity. You need to pull back, and market's closed. Don't do your analysis when the market's open. You should be doing it after hours. That way you're not making impulsive decisions. And the yearly RSI on Microsoft is very, very overbought. Amazon has RSI 94.12. Are we frothy? Really? Are we frothy here? What else do we have? Apple, RSI 92.15. Facebook, I don't think they're as overbought. They don't even have any data here. What else? So you get my drift, right? They're very, very overbought. And if you want to even go drill down to a quarterly view of Microsoft. Quarterly view of Microsoft, RSI is at 89.79, almost 90. Are these shares frothy? I don't think I need to answer it. And think about this. Their guidance is limited. This is shocking. Let's take a look at Apple, quarterly basis. Not as overbought. RSI 71. What else? Facebook. Not that bad. Google. Not that bad. But Microsoft, Amazon, very, very overbought. I think there's more room to the downside. And when they go, the others will probably be going as well. And there are a lot of people on here tonight. Thanks for joining, folks. Thanks for spending your Sunday night. Can I ask you to please smash that like button if you haven't already done so, please? Thank you very much. It helps me with YouTube. So Alcoa, I would avoid. Going back to that. BA, Boeing, one of my proudest calls here. We'll bring you back in the time machine when we called the head and shoulders setup on Boeing. That was back here. We hadn't broken yet. That was around November, December of 19. Oh, how the mighty have fallen. So we're below the closing price of last month. Let's go to a weekly chart. Stay consistent. Here's what I warned about earlier. Rolling over on Stokes, lower highs. The trend is intact, folks. We have already taken out the lows of the back half of April, the final week. Actually, this is the final week. So we took out the prior week's lows last week. So it looks as though the selling has resumed on Boeing. Daily chart. I think I have a different one here. Let's go to this one here. All right. It's time to up. I have a fly in the room here. Driving me crazy. Aggressive bugger, too. So, Boeing actually broke out, but it was a dead cat bounce. Now, the shorts are going to lean in to this name on a break below, let's call it 128 thereabouts per share. And we are putting in lower highs on RSI. Bearish bar on Friday. How's volume? Volume very high. So you're beginning to see institutions again begin to step up and pummel. Let's take a look at it on a daily basis. On TrendSpider. Again, outside reversal bar. I think we're coming down here. I think the next stop is going to be 119 per share. And that's probably not going to be the bottom. It could be a tradable bottom, but not an investable bottom. So we'll create an alert. Okay. And we'll keep it active for a few weeks, and we're good to go. So Boeing, I wouldn't touch unless you're considering a short. But I wouldn't short it unless we break support. All right, Eric, I'm looking at it right now. You didn't get it? Okay, I'll take a look at it. The moment I get off, I'll take a look at it. Could it be that Warren already sold his shares? He's not saying. I think he's out. I think he's out completely out of the. If you're referencing Roderick, if you're referencing the airlines, I believe he's out of the airlines completely. Thomas, KB Holmes is an interesting chart. The builders, boy, you're brazen. We'll take a look out of curiosity. KB Holmes. I'm surprised it's this strong, to be honest with you. You know, a beautiful month in April, no doubt about it. I hadn't seen this chart, to be honest with you. I was not looking at the home builders. And yeah, you're right. It's a very interesting chart. But I'm not sure how they're going to be able to continue higher with economic conditions being what they are and probably going to get worse. And with underwriting criteria by the banks becoming very, very stringent now. So I would be careful here. It's a pretty chart. We have not made a new monthly high. Yeah, you got to avoid. I mean, they shot them up higher. My guess is you have a bunch of shorts in this name. And we hit resistance right at that 28 level. And they sold into it. I think that if you're long of this, you got to book profits and step aside. Because I think we're going to pull back here. Do we crash and break down to new lows? I don't know. But I wouldn't want to be a home builder right now. So I would avoid. Daily chart. Not a bad day on Friday. Yeah, we pulled back, but we rallied off the lows of the day, holding support. But I couldn't buy this. I mean, just can't. I don't think the economic realities have caught up with many stocks. And I think it's the Federal Reserve that did it. They prolonged this entire correction of the economy, and we need it. Minoj, hey, brother. I just lost your comment. Trisha, hello. CRWD, okay. Pat, he's out. Okay, yeah. Pat just confirmed he's completely out of, Warren Buffett's completely out of the airlines. GDXJ. We'll take a look at DBA. All right, I'm going to round this off because we're coming to the close. DBA. Pat, I went over those two symbols. I don't know when you got on. Earlier in the video that you sent me over. GDXJ. For the lovely Trish, we have CRWD. And for Denny, FAZ, and we're going to leave it off with that. Okay. All right, the DBA. I want to use my saved charts here for the DBA. I think it's Invesco. Yeah, Invesco. Now, I haven't looked since Thursday night at this chart. And on Thursday night, that was my favorite chart of the week, because it appeared as though we were finally put in a bottom. Where the heck is it? I passed it. Dope. Okay. Monthly chart. Wrong one. Monthly chart again. All right. So we closed down last month, but we have an inside month so far this month. The trend is clearly still to the downside. No debating that. Has anybody been to the supermarket the past few days? Food prices are ripping through the ceiling. Agriculture, meat. You can't find meat. Weekly chart. Beautiful week. It closed out very, very strong. I think that we'll probably break out this week on the DBA. So longer term, I'm warming up to it. We'll probably be nibbling. This is what we look at when we're looking at investments. When we start seeing long-term, sorry about that, corrections or bear markets potentially coming to an end. Am I calling a bottom on the DBA? No. Why? On a monthly basis, we have not broken out yet. Until we begin to put in a series of higher highs and higher lows, the bear market is alive and healthy. However, that's on a monthly basis. But on a weekly basis, you're starting to see signs of life. So at a bare minimum, we have a trade here. We have a circumstance where food is becoming scarce and expensive. So we are now seeing it reflected in the share price of the DBA. I think we're probably going to pop this coming week. It's definitely a trade. Is it an investment yet? Not quite yet. I'm not ready to go there. But it's certainly a candidate for being one that we'll be eyeballing. RSI hooked up, broke out last week. Very nice. But still, we're in a downtrend. I don't want to get everybody all excited about buying the DBA, and I have no position in this at current. Chuck, you have a great night too, pal. GDXJ. This we do have a position in. Oh, that's a... I keep thinking of Nugget. Van Act. Here we go. All right, so weekly chart of the GDX. We were down last week. We were lower. We rallied off the lows of the week. No breakout. The dollar rallying at current. We'll go back, as a matter of fact, to take a look at how we're closing out the first hour of trade this week before I sign off. But the dollar is rallying. Will that crimp gold, the miners? Not quite sure. Gold was up earlier. So I remain bullish on the GDX longer term. The weekly chart tells me that we may just see more consolidation sideways. So at current, is there a need to go running in with both feet? Thanks, Oliver. Very much appreciated. Did I do it simple for you? Oh, Oliver. GDX calls last 2 weeks. What a ride. Thanks for your investment knowledge, Bob. First learn the GDX on your channel. You're very welcome, sir. Thank you very much. It makes my day. Thank you very much. Oh, gold's dropping now. Okay. How's the dollar holding up? We'll go back to that in a moment. Thank you for that. So GDX weekly basis, no reason to go rushing in there at current. And remember, I'm talking about inflation at one level, being food, right? That doesn't mean you can't have deflation in the entire economy, where you have pockets of inflation, which may not be enough to send gold higher. So a pocket of deflation does not make for a bull market yet in gold. The deficit spending, no doubt, does longer term. So gold miners daily. These charts are screwed up. There we go. A beautiful reversal day on Friday. We had broken down in the morning, reversed to recapture support. If we would have closed at the lows of the day, I would have had to have thought about lightening up on our position, to be honest with you. But a nice reversal. I think that what we're going to do here is we're going to trade sideways. Once we begin to break out above 42, then 43, then it's game on. I mean, if you're not positioned, you better be positioned in the miners, because they're going to go a lot higher. And once the dollar breaks, and last week after the close, it really began to break down. I think they're stepping in and salvaging it at current. It did not look good for the dollar at all in the after hours trade. CRWD. In fact, let's go to FAZ, then we'll go to CRWD last. FAZ, that is Direxion. FAZ is a leveraged ETF putting you short of the banks. Now, we retested a breakout point last week. We had done it before. We had broken out back here late February, rallied, broke back down through a couple of support levels, retested support in the week of March the 6th, rallied, pulled back, again, retest. We could not close positive last week. So while it's bullish that we rallied off the lows of the week, they couldn't close the deal on sending the banks down lower. Daily chart. Looks pretty. The indicators look pretty. But we are right at resistance. So I wouldn't go buying these on Monday morning. And they could quite very well spike them up. If they do, they're probably going to get stalled at $28 per share. You need a pullback. I don't like momentum trading leveraged ETFs when they don't have clear blue skies. What I mean by clear blue skies is meaning that there's no overhead supply. This has plenty of overhead supply. Let's take a look at the XLF. And this is the real Pimp Mac Daddy chart you want to watch before you got long of the FAZ. You want to see the XLF breaking down. And it broke down on Friday, but it didn't break trend. And the trend is started right here, the 23rd, a rally. That rally's still intact. Weekly chart. The weekly chart is not looking good here. All right, so I've been talking about this a bunch of times tonight, about the stochastics. And all too often people use them as overbought, oversold oscillators like the RSI, and that's fine. But there are other reasons why you use them. And I always talk about how markets send you signals. And when I see lower highs on Stokes form and on RSI, it just validates to me that what I'm seeing on price is accurate. And I didn't get all warm and fuzzy about the rally in the banks last week. I did to a certain extent on the small caps because I was worried about the stalling action on the weekly Stokes. And that's what kept me out of the banks. Besides, their earnings were horrible. And I knew it was only a matter of time before the market just caught up with them and said, you know what, we'll call them BS on this. And the rug gets pulled out from underneath them. So they tried to break them out on a weekly basis. Real ballsy move, but they were rejected. I think that we break down to lower lows this coming week. I'm getting a lot of text here. People trying to send me information. If it's good information, I will share it with you. Whoa. All right. Mostly about volatility being up 5%. And volatility has been up, and it's stayed up. So be very, very careful here in this market, folks. This is not a time for bottom fishing because we don't have a bottom. There's no bottom. So that's the banks. I would avoid the banks. FAZ, I need a pullback. We'll bring it up here. You're probably going to get a pop-up higher tomorrow morning. We broke out on Friday. A lot of resistance above here. I want to share this chart with you because I want you to be aware of where your enemies are if you decide to buy these shares. And they're right up here. What the heck is that? Remove that. All right, so what I want to see here is that we actually broke out above a daily resistance level on, and I'm an affiliate for TrendSpider, folks. There's a link below if you want 25% off of their product. And they're what I call my spell check for technical analysis. Sometimes they pick up things, or the algo picks up things that I don't see, which is always good. And it's usually when I'm using multi-period analysis. We'll keep this active for a couple of days. All right, and that support level is at around 25.66. Let's overlay some, and just keep in mind, these are your resistance levels above. They may spike this right up. I said 28 before, which I think is a reasonable resistance level, but TrendSpider has it at 27.61 because they're using a declining moving average of resistance. Let's bring up some weekly overlays here. We did break out slightly on a weekly basis as well last week. But again, the alert remains the same. I want to see a pullback and a retest. And don't be a bit surprised to see tomorrow morning that gap the markets down lower. If in fact that's what happens, I don't know that to be the case. But if they do, to expect a counter trend rally. Some news comes out, more Gilead, whatever, they'll try to pull. Believe me, it's such a corrupt market. I'm nervous about being short. You'd expect me to be happy that the futures are gapping down right now. I'm actually nervous. CRWD. CrowdStrike. Why does this sound familiar? Not much data on a monthly, weekly. Be careful. You're right at resistance, and traders are respecting it. Now, should we break above? Trish, what sector are they in? John, have a great night, pal. Thanks for joining in. Cloud storage? Okay. Thank you. We'll keep this active. And we know from Amazon, Microsoft, that's where they saw a lot of growth in that cloud business. So if we break out and we close above that mark, I would be interested. But at current, we have too many sellers above, a lot of risk, and not much in terms of reward. The daily chart looks okay, so it's kind of a conflict. If you're going to be good, because we broke out on Friday, if you're going to be good, I mean really, really good with your stops, and you put a stop loss in just below Friday's lows, you want to scratch the itch. If your goal is to buy 100 shares, you want to buy 20 now, and you're going to set a stop loss right below Friday's lows, great, go for it. If you're not, wait for the breakout and then buy the shares. You're welcome, Trisha. Let's circle back and go to hey, pre-drag. CRWD is, cybersecurity? Maybe they're in both. We'll leave off with a circle back to the futures. Not much of a change. We're down about 1 1/3%. I think they're going to try to defend this mark here at 27.70. Last tick was 27.81.50. If they break it down below this mark, we're coming down here. All right, so our alert is set. Let's go to the Nasdaq. Nasdaq 100 down, but not as much as the S&P 500. No shock there. We broke support at the 86.44 mark. So I think that we're coming down here. Yep. $84.62. That's probably where we're going. Gold. All right, so gold popped up. I see what they're doing here. All right, so this is bearish. It's up at current, but I don't like the price action. And again, it's in my best interest to see gold go higher because we're long of the miners. But I don't like the price action because we were in a multi-day consolidation here on a 4-hour chart. These are all 4-hour charts. And what happened was that we broke down here on the 30th. Yeah, the 30th. Now we're rallying back. We still haven't recaptured that support level. And now we're right there. We're just shy of it. We haven't even made it back up that far yet. And we're being stopped at the 20-period moving average. And we're giving up gains. So I'm a little bit cautious here about gold. Let's check out silver. There we go. Yeah, silver's in trouble here. All right, so this is a perfect example of how breakout points work, breakout point failures work, or bull traps. Call them cupcakes. I'm telling you, you see them, they're bad, 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 bad. So we've seen a lot lately, a lot of head fakes. You saw it on the Nasdaq, you saw it on the S&P 500 last week, you saw it on silver as well. We broke out here on the 29th, failed to hold, rallied back yet again on the 29th. What do we do on the 30th? Failed to hold it. This time, traders took it seriously and they sold it off. There was a bit of denial. Now, fast forward into Sunday evening, we are now breaking down to new weekly lows on silver. Be very, very careful here. I think silver is in a little bit of trouble. When is it not in trouble? If we manage to rally back, remember, we're only 1 hour and 17 minutes into this 4-hour bar. All right, for all I know, we rally back and we close back above this red bar. And you know what? All is right with the world, unless, of course, we give it up next bar. All right, but at current, as we know it, it's weak and it doesn't look good for silver. But it doesn't matter until this closes. And we're beginning to see some bids move back in. 15-minute chart. I would avoid until we see a close back above 15. That's a line in the sand. Back to a 4-hour chart. Let's circle back, go through nat gas. Oh, bonds. Bonds. Forget nat gas for now. I wanted to point this out earlier. I forgot about it. Look at this consolidation. This is since early March. To be specific, a consolidation that began at the highs of, what is this? The 9th of March. And we are at the pinnacle of a huge wedge formation. And it appears as though that bonds, this bull market, is set to continue into this week. And at current, we are breaking out. But we had a head fake not once, but twice last week. Here, we broke out, failed. Here, on the 1st, broke out, then failed. If it fails again, I think that the bond market rally is going to be in a lot of trouble. Because I want to know, this is the reason why I'm setting these marks up. I want to know if we get another breakout point failure, because that means that yields are moving up higher. So I'm suspect of this. But at current, it's breaking out. It looks bullish for bonds. Crude remains weak. Down 5% now. Nat gas, yeah, it's been rejected. We were up significantly more earlier, but we have been rejected here. But again, the session is still young. Anything could happen. But I will point out that trend in RSI is over. And I think that this is one of the tools that traders who use RSI don't take advantage of. They look at it for overbought, oversold reasons, which is great, but it sends you signals. So back here, we broke down on RSI. Now we're trying to break back out yet again. I don't know. Until this gets squared away and we have a clean break above this support level, or a pullback and a support above this support level, and RSI is putting in higher lows and higher highs like it's supposed to, I wouldn't touch nat gas at current. And with that, folks, I'm going to sign off. Everybody have a great night. Have a profitable trading week, and please be safe. And smash that like button, please. Thank you very much. Be well.